Hello and welcome to Tax File. I am Laurie Bala Hassan and I am thrilled to have you join us for another information-packed episode. We'll kick off with the latest updates from the world of taxation, bringing you the news that matters. In our Did You Know segment, we got some eye-opening tax facts that might just surprise you. Next up is Vox Pop, where we hit the streets to hear your opinion on some tax topics. Then, in the Knowledge Zone, we'll break it all down and add context to what people are saying. You'll also hear from our experts on our Professional Insight segment, helping you better understand issues around taxation. And of course, we'll wrap it up with Words on the Net, where we answer your questions and comments from the digital space. It's going to be a dynamic and insightful session. Let's dive right in. And now the news. The Corporate Services Group has recently hosted a tax expenditure workshop aimed at promoting accountability and curbing wasteful spending. The event, which focused on impact of tax expenditure on equity and fairness for citizens, brought together key stakeholders from various organizations. Nta Akure reports from the venue where participants shared insights and engaged in discussions on effective tax expenditure management.
The Executive Chairman of the Federal Inland Revenue Service, Dr. Zach Adedeji, commended the Corporate Services Group for coming up with a timely topic for discussion and implementation. He said observations have been made in respect of tax incentives and expenditure, which include duplication of incentives, lack of a central coordinating framework for incentives, and lack of clear expectations on why exemptions are granted with an aim of blocking abuses and promoting fairness. The coordinating director of the Corporate Services Group, Mrs. Bolaji Akintola, said the workshop is important at this time to strengthen Nigeria's fiscal position and improve efficiency of public finance.
The workshop, interacting with all stakeholders from different ministries, different MDAs, customs, and all these people coming together, all of us deliberating. I believe that the fallout of this, or the outcome that we hope for, will be better management of tax incentives and expenditures by the Federal Inland Revenue Service.
A cross-section of speakers and stakeholders at the event were unanimous in their submission that there are gaps in tax expenditure and incentives which need to be closed. Tax expenditure is the estimated revenue that government loses as a result of granting tax incentives and other exemptions to some taxpayers.
The Federal Inland Revenue Service, FIRS, is prioritizing the standardization of policies, practices and procedures to enhance efficiency and position itself among the world's best revenue service. To achieve this, the Field Operations Monitoring Department has launched standard operating procedure training, beginning with field offices in the Federal Capital Territory and its surrounding areas. The initiative aims to streamline and unify processes across the country, ensuring consistency and effectiveness in operations. According to our reporter, Nta Akure, staff members are enthusiastic about the training and committed to implementing the new procedures diligently. The reports.
The director of the Field Operations Monitoring Department, Mr. Matthew Osaniku, while going round to monitor the training at various field offices within the Federal Capital Territory, expressed readiness to ensure that processes are streamlined within the entire service.
So one of the key drivers of an LD tax administration is standardization of processes. So I'm glad that the SOP have been rolled out and signed off and embraced by management.
He said the training became necessary because of the gaps identified by management in the operations of field offices and the need to close those gaps by standardizing processes.
In a significant move to bolster international trade and investment, Nigeria has successfully concluded double taxation agreements, DTAs, with both Switzerland and Tanzania. The twin negotiations, which took place recently, was held in Abuja, Nigeria, and Dar es Salaam, Tanzania, respectively. And that brings us to the end of the news. Over now to our Did You Know segment.
Did you know delaying your tax payment in Nigeria can lead to hefty fines and daily accumulating interest until the full amount is settled?
Over to Mariam for the Vox Pop segment.
Hello and welcome to the segment. My name is Mariam Julie Adura. Today we'll be finding out about late filing and its penalties. Come along with me.
Penalty for filing late is 25,000 naira for the first month of not filing, and subsequently 5,000 naira. Then for VAT, is late filing is 50,000 naira for the first month of default, and subsequent months is 25,000 naira. Where a taxpayer fails to pay as and when due, interest applies for the established liabilities that remains unpaid as at when due. And the penalty, the interest is 10% as stipulated by the Establishment Act.
If you file VAT late after 21st of every month, there's a penalty attached to late filing of VAT. And there's also a penalty for late filing of CIT after June 30th, for those that have 31st December as the end of their year.
In Nigeria today, companies' income tax, you're expected to file 6 months after the end of your financial year. So if your financial year is December, it means that by June, you should have filed your returns. If you don't file as at the due date, of course, there are penalties that will accrue for not filing when you are due to have filed your return. Same for VAT, same for PIT. Okay, so the penalties come in various forms. There's what we call penalties for late filing. That one is accruable per month most often. For every month that you default in filing, for instance, in your CIT, there's a penalty for it. Then there's a penalty on the liability itself that you were meant to pay. As at when you were meant to pay it and you didn't pay it, it means government is losing revenue. So there's penalty for not paying when you are supposed to pay it. And then there's also interest elements to it. So there's a fixed penalty, and then there is a penalty usually will be like maybe 10%, and then there's interest, which will be at the rate of CBN rate.
Your tax filings is due for the 31st of December, and you have a grace till 31st of March. Immediately after that, you start paying penalty. Depending on the sector, there are different penalties that accrue to different sectors, and depending also how much the tax the person is supposed to pay.
Ashu Abe is here to take us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we shed more light on interesting conversations earlier had on the streets. I remain your host, Ashu Abe. In this episode, we'll be talking about penalties on late filing. For VAT, value-added tax, a defaulter shall be liable to a fine of 50,000 naira in the first month of default and 25,000 naira for every month in which the default continues. This means that the penalty is cumulative and until returns is filed. For company income tax, CIT, failure to file CIT returns attracts a penalty of 25,000 naira for the first month and 5,000 naira for each subsequent month of default. For tax evasion, Section 40 of the Federal Inland Revenue Service Act of 2007 states that tax evaders face criminal charges, liable to pay withheld tax, and a 10% penalty per annum. Over to you, Lore.
And now to our Professional Insight segment.
My department, as the name implies, we handle the security of FRS nationwide, protection of the facilities, and also we provide safety measures in our offices across the country. We provide equally logistic support, which has to do with vehicles, transportation, and the rest of them. And we equally handle insurance aspects of the service. Now, looking at our function, of course, you agree with me that it is only somebody that is secured and safe that will be able to go and collect tax. And it's only somebody that is that has mobility that can move to go collect tax. So for tax compliance and enforcement, of course, you agree that we ensure that there is always a need for us to do a security assessment. Are you following it? We do security assessment to ensure that where we want to go carry out our enforcements are actually safe, and we equally provide logistics for the enforcement people. And also, we ensure that we provide cover because the police, in FRS, we have a police team contingent that is under our supervision, my management as well, the department. So we provide the police team that will accompany the tax officers to carry out the enforcement. And one other thing we've tried to do is we are actually now running a program, let me say so, where we're actually inculcating most of our staff to become supernumerary police officers. Why do we deliberately have to do this with the support of the executive chairman? Is that the intelligence exposure to intelligence industry, intelligence domain, enables the staff too to be able to appreciate intelligence information, even while they go out to even serve tax notices. Because they are supernumerary police officers, they have more state authority. They can equally call the attention or the support of state security agencies. In terms of insurance, supposing in the course of enforcing there is any casualty, of course the insurance is under me, and insurance generally is covering every staff, an asset, both physical asset, whatever covers me. And insurance is there to cover. And so the department is actually critical in supporting FRS larger goal of tax enforcement, tax compliance, because we ensure that these activities are done within very safe environments. These activities are done under very security tight situations. And we always believe that it's only the man that is alive that can collect tax. What we have come to see over a period of time is how do we better manage our fleet resources. And that has to do with ensuring that the fleet vehicles are used maximally, not abused. And we have tried to, as much as possible, automate fleet system. You know, what we have done is we've introduced the automation, the fleet management system, and we've introduced the fleet management app, and also we've brought in a tracking system for fleet. And also we provide fueling, we provide maintenance, and ensure that vehicles are actually allocated to critical functions as the need arises. The vehicle policy we put in place is very strategic here. It says vehicles are allocated to functions and also to categories of officers. And all of this picture is bringing to bear the fact that logistics has to be provided to where it is critical, to offices that drive tax mainly, and also even while being used for those tax functions, they are properly used, not abused. And that's why we have a tracking system in all our vehicles, and we can actually monitor our vehicles, and we can also geofence our vehicles so that it doesn't go out a particular area. And also, one of the things we have done is to ensure that we put in place a very proactive maintenance system for the vehicles, whereby when vehicles are due for maintenance, it beeps. There's a device we put in a vehicle that beeps when vehicles are due for maintenance. And one of the things too we've done, because the vehicles are all over the country, we have our Security and Safety Department has representatives in state coordination office, and also working together with admin officers of different offices, where each vehicle has a file that will be open, and we track the maintenance to ensure that vehicles are used optimally. And one other thing again that we have done to ensure that our vehicle actually support tax activities is to ensure that vehicles are actually disposed to people who are retiring. It's a form of a motivation, so that when staff now know that when I'm retiring, I can have this kind of benefit. They put in their best to ensure that they actually take personal care of the vehicles too, because eventually, as a directory staff, you will likely buy them, possibly. So these are some of the activities that we do to ensure that vehicles actually support tax activities, tax compliance, tax enforcement, tax collections, and while getting better value for the vehicles. In the place of security and safety, we cannot downplay the essence of continuous risk assessment, continuous threat assessments. That's one of the things that we have actually put in place to ensure that we proactively know situations based on environmental scanning. And one other thing we do, which management has brought to bear, is intercollaboration. So interdepartmental collaboration. You see, before offices are rented or before offices are built in particular areas, there's a collaboration between security and safety, building and facility. We do assessments. We recommend places that offices are going to be sited. And even when offices are supposed to be rented, we recommend based on environmental threat assessments. It becomes part of the decisions of management. So apart from interdepartmental collaboration, we equally have external stakeholders collaboration. Just like I said, officers now are becoming supernumerary police officers. Most of our staff too are becoming safety team members. This is another layer of proactive security we are trying to create, because security actually rests more with the individual. An enlightened and a very security conscious staff is a first layer of defense when it comes to security. So we try to ensure that that layer is also harvested to support our activities when it comes to where we are operating. And also we're lucky, we're fortunate to have a contingent of armed security men deployed to FRS. So based on our threat assessments and the rest of them, we deploy some of those armed men to offices that we have considered as the threat level red, high. And aside that, or in addition to what all these levels of protections that we have put in place, we have training we give to staff, often security training, sensitizations, trying to up knowledge, trying to expand their consciousness of threat situations. And of course, if you are on our platform, you see regularly we submit security advisories, tips on different aspects of security exposure based on our research, based on our security environmental scanning findings, on different aspects of precautionary measures that we want staff to take. And we release that off nearly consistently. And we have a control room. We have control room, and we decimated our control room. We have control rooms in some state coordinations, which ensure that we have 24/7 communication. Emergency numbers are there. We only include them in our advisories. And our offices are not just open. In fact, it's a public office, but we make sure that access is restricted, controlled. If you go to our offices, we have CCTV cameras, we have armed men, station men, private guard station. We have baggage scanner systems, metal detector scanners, CCTV cameras, and our offices are fortified with electric fences, security, solar lights that doesn't need electricity, So we do quite a lot of, put in place a lot of layers of protection to reassure our staff, regardless of the environment they work, security has been standardized. Even when events are held, we participate. We do not leave our security in the hands of public. Even if we're holding events in hired premises, my security team, the FRA security team must take care of the security of that event center until the event finishes. Data is one critical thing that everybody is concerned about. Data has to do with information. Your information resting with FRS, and FRS information resting within FRS. You see, they are based on our threat assessment and vulnerability assessment, we've come to see that the insider threat is a very critical factor. And that is the reason why we do background checks. Most of our staff, they go through background checks, either as upon employment. Even our facility where we have third-party providers, the security men, the cleaners, we conduct background checks. That is one. Second thing we do is in liaison with human capital, in liaison with technology, in liaison with core tax operation, we ensure that data that has to do with taxpayers, to be able to give them information, has to be handled by staff who have taken oath of secrecies. And information that are stored, like data has to do with hard paper and the soft copy. Technology department is actually doing a lot that has to do with encryption. And we too, we are doing a lot that has to do with protection of the physical asset where the data are. Like the server rooms, our server rooms are fortified. They have different levels of security protection. You know, we've had situations where we have to put triple level protection on data accessibility. And all of these things gives the taxpayer some confidence that your data is safe, it's not going to be abused. And also gives the staff a safe that your information will not be abused. And also we are guided by the National Data Protection Policy, which gives some level of protection and accessibility to who can have access to data. And I think that has actually given the taxpayer some level of confidence in us.
Swateku is here to take us onwards on the net.
Hello and welcome to What's on the Net. I am Joyce Swateku. Fego still on X wants an answer to this question. Please, could someone answer me? I'm stuck in processing my TCC. I've applied, but I'm still receiving pending process. At Fego Steel, if TCC application is showing pending application, it means the application is still undergoing processing in the tax office. However, the turnaround time for concluding the process is usually less than 48 hours, and the tax clearance would be issued. Newman on X is asking, please, how much is tax clearance for a newly this month registered company? Dear Newman, a newly registered company can obtain its tax clearance certificate, TCC, free of charge. To apply, the company must submit a written request on its letterhead, complete the registration input form, and answer the standardized questionnaire before submitting these questions at the tax office. However, if the application is made more than 90 days after incorporation, the company will also need to provide a statement of affairs prepared by an auditor, accountant, or tax practitioner. Once all required documents are submitted, the TCC will be processed within 10 working days. In summary, there is no fee payable to the Federal Inland Revenue Service, FIRS, for obtaining tax clearance for a newly registered company.
And that's a wrap on this episode of Tax File. I hope you are living with fresh knowledge and a stronger grasp of today's tax realities. Remember, the conversation doesn't end here. Follow us on social media to share your views or drop your questions. We are always here to keep the tax talk going and make sure you are in the know. Until next time, I am Lauri Balahassan. Stay curious, stay compliant, and keep it locked on Tax File. FIRS, simplifying tax, maximizing revenue.